day traders, welcome back to Fides Trading Channel. We're back again with another weekly flows video. Today's Sunday, the 12th of October 2025, and we'll be looking ahead until the 17th of October 2025. Each week I break down the markets using a top-down approach, starting with the higher time frames to map out the bigger picture. By analyzing key zones, trend structures, and institutional behaviors on the weekly and daily charts, I uncover the dominant bias and potential market flows for the days ahead. This helps me filter out the noise and anticipate major moves and stay aligned with where smart money may be positioned. Tune in as I decode the charts and lay the groundwork for the trading week ahead with clarity and precision. So starting with gold currently trading at 4,016, trading above the 4,000 pivot level after a massive bullish rally last week that took price all the way up to the 4056 level. Sorry, still getting used to saying fours when we speaking about gold breaking past at 4,000 barrier. At the break at 4,456, we can see a double top formation formed here before the massive drop off on Thursday, creating a deep retracement which took price all the way back to 3,000, to the pivot level at 3,950 before price kind of recuperated on Friday, eventually settling just above 4,000 after a late push during the latter part of the New York session on Friday. The market is extremely bullish on the monthly and weekly timeframes. Excuse me. Let's just drop into the monthly time frame. We can see that price is currently trading with a full body bullish candle here on the monthly time frame. Then on the weekly time frame, we close with a full body bearish candle despite that drop that we had on Friday. So it is clear that last week we did see some massive moves in the market. That being said, price is trading above the 21 and 50 day SMA region and is overextended on both the monthly and the weekly timeframes on the RSI. We can see that this is just strong green all the way back from bent green for over a year. Damn, look at that. For over a year, we've been in the overextended territory for gold. So it just goes to show that store of value and that safe haven for tumultuous economic times. Price maintains its bullish momentum per the indicators, like I mentioned, and moving into the overextended levels. Last week we saw nearly 100-point move in this market. So coming into the daily, we can see that we had a strong push to the upside, strong push to the downside, another strong push to the upside. So gold still continuing to move wavy and with strong bullish momentum. On the daily time frame, showing the strength of the bullish run since late August, price actually, since late August, price is pushing from the 2150 day SMA region right there and from the sweet spot region of the RSI, and we can see that price has moved way beyond these levels and is super overextended here on the daily time frame per the RSI and is well above the 2150 day SMA region and is definitely due for some sort of retracement very soon. Noticing that Thursday did close bearish, but if we look at the extended levels here, we would need to see a further drop in price potentially back down to about 3,600. So we will have to wait and see how price reacts at the opening of the market. On the 4 hour time frame, price continues to favor the bulls, price having a massive rally to that 4,056 level, as I mentioned, before the double top pattern was created. We can see that during the drop on Thursday, price actually pierced the 21 SMA level before pushing to the upside on Friday. So price back within that bullish trending level after the break above the 4,000 pivot level from 3,950. We can see we consolidated within that zone for a specific period of time. We had some indecision candles here, but ultimately during that latter part of the session, price did push to the upside. During the next week, we're waiting to see if price can maintain its momentum above 4,000 or if we will see a deeper correction to lower levels first before a push to the upside. Expecting further upside potential from gold in the long term, but of course we are noticing the bull bear trap that is currently forming. The bull bear trap meaning that price has the potential to push to the upside, but we are seeing massive resistance coming in from the 4,056 level, as well as the massive 4,000 level, which should act as a huge psychological level. But of course, we hit 3,000 within this year, and now we're hitting 4,000. So, the go bull rally continues to run. In terms of the downside trap, it's because we're seeing overextended levels on the higher time frame, and then on the lower time frames, we are seeing bullish potential. We're seeing some bearish signs and then bullish potential. So it's very uncertain as to where market directionality is currently going, because we are within that range right now of 3,950 and 4,056. So really see how price reacts at the open if we hold above 4,000. If we don't, we're obviously going to recalibrate market analysis to trade to the downside. And if we continue trending higher, we'll have to wait to see if we break above that 4,056 level. And it all will be determined by the Asian and London sessions before we step into New York session tomorrow. So that's very much the gold analysis. Moving on to US tech. US tech currently trading at 24,022 after a massive sell-off following Trump's tweet regarding a 100% tariff for Chinese imports. Markets were creating all-time highs and did peak at 25,200 before the massive drop at the beginning hours of the New York session, which continued throughout the session all the way down to the pivot of 24,000. With massive bearish momentum, as we can observe here. On the monthly time frame, we are currently showing a bearish pin bar, with the weekly showing a bearish engulfing candle. That being said, price action structure is still very much bullish on both the monthly and the weekly time frames, with price trading above the 21 and 50-day SMA region and bullish on the RSI. On the daily time frame, we're seeing that price. Whoa, sorry, we just dropped it a little bit further. On the daily time frame, we're seeing that price has this massive bullish candle due to Friday's drop, which has engulfed many candles all the way back to the 12th of September. So strong engulfing candle right here. We are within the 21 50-day SMA region here on the daily time frame, and we are looking a bit bearish on the RSI, just peaking just below 45 right now. That being said, we could potentially see a test of the 23,700 pivot level, or we could see a test of the 23,000 level, depending if the bearish momentum continues into next week. On the 4-hour time frame, Nas traded bullish during the past week. Just as we can see, I did continue bullish for the majority of the week, just above the 21 50-day SMA region, and bullish on the RSI with very choppy price action, leading to the peak at 25,200. Double top formation before the massive drop during the New York session at 4 o'clock, with the massive sell-off dropping well below all structural levels that were created here, and below the 21 50-day SMA region. However, still above the 200-day SMA region. We are in the overextended bearish territory on the RSI as it stands. Market seeing a massive shift in momentum after the announcement by Trump, and currently seeing massive bearish structures being formed. That being said, the bearish nature was being driven by fundamentals of the news release and regarding tariffs, so it could potentially see a reversal at the open of the market. Thus, market directionality will have to be determined at the open of the market. If the 24,000 pivot level holds, we could see the bull stepping back in. And if not, we could see further bearish movements, but also noting the 200 SMA as being a strong support indicator for this bullish trend in the past. Let's move on to US30. US30 also seeing massive bearish signs. You can see that it's currently trading at 45,517 and is bullish per the monthly and the weekly time frames. That being said, we are observing a bearish pin bar here on the monthly and a bullish engulfing on a weekly time frame, but we are still trading above the 21 50-day SMA, and we're bullish on the RSI. Looking at the daily time frame, price trading within the 21 50-day SMA region, and is bearish on the RSI after the massive drop we saw on Friday. Price potentially targeting the 45,070 pivot level. We're waiting to see if we can get a test of that. If price continues to move bearish beyond this point, we could potentially see a target of 42,850 pivot level. Let's actually just make this a little bit more accurate. There we go. Beautiful. Yeah. So we could potentially see a test of that level. However, we can see at the 45,070 pivot level that this has been a reaction point multiple times in the past, especially throughout July, August, and September. So we could potentially see a test and a bounce from said level. Moving into the 4-hour time frame, we can see that the market is bearish on the 4-hour time frame, showing price moving with bearish momentum, breaking previous support structures and trading below the 2150-day SMA region and overextended on the RSI. Price maintaining its position above the 200 SMA, however, noting the depth of the correction, could assume that the market has run out of bearish steam and could see buyers stepping in from that 45,070 level again. Again, we would have to determine market directionality once the market opens due to the massive move at the close of the market on Friday. Taking a look at VIX, we can see that the VIX has exploded, currently trading at 21.65 after peaking at 22,043. That being said, previous week's close was at 16.73. Market driven by the Black Swan event caused the massive volatility, which has shifted the market back into risk neutral territory above 20. This move does benefit further upside for gold while it enhances the bearish potential for indices. In terms of fundamentals, the US government shutdown continues for 2 weeks now, which has delayed all news releases and in turn puts strains on the source of information for traders to utilize. Right now, all news headlines are focused on the government shutdown and the tariffs for China. Gold highlighting the all-time highs of 4,056 and the surpassing of the 4,000 mark, which we didn't think we would see this year, but of course, here we are, as well as the significant sell-off we did see on Thursday, which seems to have also sparked the story for the drop in the indices. I mean, we saw that the drop in gold took place on Thursday, and then the drop took place in the indices on Friday. So, not one to theorize, but there's clearly some correlation going on there, especially with indices now being focused on the massive drop that we see due to the tariff increases and the government economic shutdown. I mean, what the heck is going on in the USD? But yeah, it is what it is. And these are the markets that we've been dealt. These are the cards we've been dealt, and this is how we're going to be trading. In terms of my trading style, I've actually just been focusing on gold and I've been making some good strides to the upside, just scalping and growing my account. Right now, my trading style is very much not looking for swing trades and actually just focusing on scalping and intraday opportunities due to the volatility we are seeing in the markets. This has helped me avoid that massive sell-off that we saw on Thursday where I was trading to the upside and I only lost a minimum amount versus the gains I made all the way from the beginning of September, late August, beginning of September. So yeah, that is pretty much my trading style. I'm sticking to it due to the volatility we are seeing in these markets. I haven't really traded indices so much, but yeah, focusing on scalps using the 1 hour time frame and the 5 minute time frame for entries, and it has been paying me dividends. We'll be sure to drop a video on that soon. Do want to improve the look and aesthetic of this YouTube channel. So if you do have some ideas for me to integrate, please let me know, make it more enticing and get a few more followers for the channel. But that being said, this is not financial advice, but my personal opinion on the current state of the markets. Before taking any positions in markets, make sure to do your own research first. Like and subscribe for more content, traders. Hope to see you in future videos. And with that, happy hunting, and I'll catch you in the next one. Cheers.